became popular in countries such as India, emphasizing the government's control over currency flow, which became the mainstream opinion in academia, and most mathematicians were still advocating for free currency floating before this. At the same time, discussions about the financial explosion in China are also on the rise, with the mainstream view that China is at the center of the vortex and has a high probability of crisis. They are worried that China will be blown up and then destroyed. In fact, the current situation of China's finance is more aptly described as the financial explosion because it represents a long-awaited energy, and the process of ultimately entering the financial explosion can be controlled by the government. In the absence of a sound financial system in China, relevant departments will not easily loosen financial regulations. As a result, China's financial civilization will transition from the financial explosion to a controlled explosion. From the perspective of Chinese reality, industrial civilization and agricultural civilization are still ongoing, and information civilization is beginning to emerge. The financial industry, on the other hand, belongs to the model of strict national regulation and a conservative approach. At this moment, entering the financial civilization still requires several hurdles. The first is the effective grafting of financial civilization with industrial civilization, agricultural civilization, and information civilization. As China's economic development mainly depends on backward state-owned enterprises, the traditional economy civilization dominated by these state-owned enterprises is likely to be magnified in the financial civilization, and finally destroyed by the financial civilization. Once the country liberalized the private economy and the innovation vitality of the whole society, it is likely to enter a benign interaction state of the four civilizations. The second is the level of understanding of the game rules of financial civilization by relevant parties, and the degree of subversion of the wisdom of industrial civilization. For example, many experts believe that the phenomenon of nationwide stock trading is abnormal and a signal of the stock market reaching its peak, while officials from the State-Owned Assets Supervision and Administration Commission believe that nationwide stock trading is a great thing due to our limited knowledge. It is difficult to grasp it clearly within a limited time frame, regardless of the purpose for which this statement is made. At least it indicates that the management still allows room for discussion on new phenomena, rather than blindly denying them. China's hybrid finance effectively balances tolerance and control, and may dominate the next wave of financial civilization. For this reason, I gradually turned my attention to Germany to learn from its beneficial experience and solve our own problems. From international comparative research, it can be seen that the German financial system is very distinctive. Germany emphasizes a sense of order, overall structural stability, and clear hierarchy. The evolution process has maintained its own characteristics. At the same time, the successes and failures of the German financial system are thought-provoking and can bring many inspirations for exploring China's financial development path. This book starts from a problem-oriented and goal-oriented perspective supplemented by a comparative analysis with the financial systems of the United States, the United Kingdom, Japan, China, and the Eurozone, aiming to provide inspiration for China's financial reform on how to learn from the experience of Germany based on a clear understanding of the basic facts and internal operational logic of the German financial system, banking, cement, beer and other enterprises with large sums of money. In just 4 months, 5 foreign institutions directly or indirectly invested in domestic cement-listed companies. However, to some extent, the influx of foreign financial capital, foreign financial institutions will also play a role of catfish effect accelerating the process of China's financial reform, stimulating Chinese people's original investment awareness, indifference and numbness of the financial concept. Secondly, the currency position difference is too large. The price of a country's currency, also known as the exchange rate, is actually all domestic goods compared to US dollar assets. RMB assets undoubtedly have huge room for appreciation and speculation due to their total bid price. The essence of financial transactions is speculation, and places with stories will naturally attract international financial speculators. The consistent expectation or premeditation of RMB appreciation has caused excess global liquidity to accumulate in China on the one hand, settling on physical assets and resources such as real estate and stock market, triggering various RMB asset protection in China war. On the other hand, the excess funds are driving the innovation and development of financial derivatives such as stock index futures, options, commodity futures, etc., causing China's virtual economy and real economy to grow dually separate, because only through the development of financial derivatives can the connection with the domestic real economy be blocked, creating a space for international speculators to freely speculate and allowing excess currency to evaporate as much as possible, such as the rapidly developing derivatives market in the City of London after the financial bomb. May it avoid domestic real resources being hijacked by international financial capital. The anti-Japanese war itself and the development of the virtual economy mean that China is being pushed into the era of financial civilization by international speculators. Thirdly, the complexity of China's financial sector is very high. This complexity is mainly reflected in different types of A shares, B shares, H shares, etc. Parallel coexistence of stocks and their corresponding rules. The staggered operation of various investment mechanisms such as QFII and QDII. It may even form a coexistence pattern of multiple financial centers such as Hong Kong and Shanghai. However, on the one hand, simpler things are less prone to errors, and more complex things are more likely to have vulnerabilities, which are easily exploited. At present, there is still a long way to go before the game rules in all aspects of China's financial sector are in place. The improvement of the game rules in the stock market itself and the establishment of rules in other financial markets, including futures, options, and other derivative markets. The conspiracy theory failed in the subprime crisis. It is undeniable that there have been instances in history where certain families or consortia controlled a country or the international financial system for a certain period of time, such as the Rothschild family, the Morgan Consortium, etc. However, in today's global financial integration, financial strategies between countries and the strategies of multinational consortia are highly likely to hedge or offset each other in the process of implementation, even if the conspiracy is successful. As a member of the international financial system, it is also difficult to stay out of the crisis. Just like Nazi Germany provoked World War II, but was finally destroyed by World War II. Thus, compared with honest labor and to each according to his contribution in industrial economy, financial civilization controls capital with wisdom, but the result is full of uncertainty. And the most important point is that Fukuoka once said before that story is the general equivalent of financial civilization. Its characteristic lies in identifying the differences in things and exaggerating them infinitely. One of the reasons why Britain and the United States can monopolize the forefront of financial civilization is this. For example, when Morgan Stanley opened the door to the non-performing asset market in China's banking industry in the problem faced by the Chinese banking industry was clearly how to reduce the non-performing asset problem in new loans, while Morgan mistakenly described it as how to dispose of existing non-performing assets. In the United States, Morgan's main method of disposing of non-performing assets is clearly to buy them and wait for the recovery of the macroeconomic environment. But in China, they promote the so-called popsicle theory rather than slowly melting them down. It is better to sell them quickly, and for a long time. The U.S. Congress has always regarded real trade as the entire economic issue between China and the United States, and has been working with the White House to reap the benefits one by one. So, it's not just small scammers who are scammers, but big companies, institutions, and countries. As the saying goes, behind every huge fortune lies a profound evil. The financial explosion has brought unprecedented prosperity and high-quality living enjoyment to people. But it has also laid the foundation for injustice, the seeds of sex, uncertainty, and deception, just like the industrial economy. Start from utilizing resources to being limited by them, from creating wealth to wasting wealth. And when a thing develops to its extreme, alienation arises. In this way, it seems easy to imagine the terrifying prospect of a financial civilization that is passionate about storytelling. On the one hand, the alienation of credit. The financial explosion has exploded the connection between tempting interest rates and honest products, such as the bond derivatives market. Future society will be people-oriented, and meeting people's various emotional needs will become the source of new business opportunities. Neil Pinker proposed in New Thinking that the six senses that the right brain era should possess include a sense of design, storytelling, symphony, empathy, entertainment, and exploration of meaning. And business opportunities lie in the experience of these six or even more emotional needs, such as doctors using laughter, yoga, entertainment to heal patients, transforming old factories into modern office spaces with a sense of design, the opening of the cube era empathy of high school, university, white-collar SNS social network services on the campus network will undoubtedly bring about the reconstruction of industrial boundaries, leading to the emergence of a large number of new industries and former TOS. On the other hand, whether it's the older generation who thinks with the left brain or the new generation who thinks with the right brain, in this comprehensive integration in the era of unity, whoever can represent the interests of the greatest majority will ultimately win. Deng Xiaoping adhered to the four cardinal principles: turning right to carry out reform, opening up and marketization, and took the middle path of giving priority to efficiency and giving consideration to fairness, so that China got rid of the ideological struggle and rose rapidly, relying on economic development. The same applies to business opportunities. Whoever can combine left brain and right brain can free from constraints and allow various elements to fuse and collide under the catalysis of creativity and imagination, so that they are no longer just looking for business opportunities, but creating them. The left and right brain connection may open up business opportunities from three aspects. One is the application of new technologies in the wave of wisdom, ecological civilization, financial civilization, etc. under the impact of various right brainization approaches. It will upgrade at a faster pace and become a carrier for generating business opportunities. Secondly, various countries may show their respective skills in seizing the commanding heights of wisdom. For example, the United States has already launched ERIC plan to study wisdom. And there are still people in China who want to build smart banks. This trend will make people pay more attention to balancing left and right, and various alternative ideas such as whether software can be downloaded and memorized in the future will bring new business opportunities and sparks. Thirdly, for most enterprises, it is difficult to achieve a left and right brain connection, so it may be the norm to be forced to upgrade the version due to being dragged by the situation. A small number of enterprises with unique thinking will unleash their creative imagination, see through changes in the situation, grasp policy trends, and quickly occupy techno. Germany's financial system developed a banking system that can provide long-term capital for the development of enterprises and industries, which became one of the key advantages of Germany in the Second Industrial Revolution. The Butler-Bank relationship is a concentrated manifesto of the pro-real economy nature of German finance, which still widely exists between small and medium-sized banks and small and medium-sized enterprises. Under the Butler banking model, Banks provide implicit long-term financing commitments to enterprises and assume the roles of long-term financing providers, liquidity insurance providers, and active leaders in financial assistance. Part of the benefit is that the phenomenon of German banks collecting umbrellas on rainy days is not prominent. The financial system has maintained long-term stability. After World War II, Germany did not resemble the United States, Japan, and Britain a large-scale financial crisis similar to other countries. Monetary stability, housing financial market stability, and corporate self-reliance are the three major supporting factors for Germany's financial stability. The stability of the housing finance market, or the virtuous cycle between finance and real estate, benefits from the protection of the German central bank's currency, the developed housing rental market, and the prudent housing finance system. The prudence of the housing finance system is mainly reflected in the evaluation of collateral value based on MLV mortgage loan value, and the calculation of loan price based on MLV with low loan-to-value ratio. The value ratio, fixed interest rate dominated, and refinancing was mainly based on the non-listed Pfandbriefmortgage bond model. MLV is a conservative assessment of the value of a property, typically the lowest price during the economic cycle. These institutional designs help to isolate the disturbance of monetary policy changes on the real estate market, weaken the pro-cyclical overlap between finance and the real estate market, and avoid the spiral cycle of rising housing prices and mortgage expansion.